We are going to talk about how the federal government actually keeps track of their transactions that go on the financial statement. So we've talked about what statements are prepared, and we've talked about how the agencies prepare them. They're consolidated up to the federal level, and what gets reported out. Where do those balances come from? We're going to talk about that right now. So this is what the financial report looks like. Where did the money come from? Well, just like our state governments or city governments that we've been talking about, there's an appropriations that happens. So there's this budget that gets set up. So the federal government establishes this budget for the various agencies, and then at the agency, at the department itself, then it becomes proprietary funds that belong to that agency. So the federal government says, here's this much money for this year's budget, and each one of the agencies will get this much, and they appropriate that money, and then that's a set of books that gets put out as a budget, and then each agency is keeping its own proprietary accounts. Here's what we've got, here's how we're spending it. Alright, so budget accounts provide a record to trace the appropriations, and proprietary accounts are how they're actually the actual accrual-based accounting that's going on within each agency. So each agency has a proprietary account. So here's how the budgetary authority process works. So Congress passes a bill, the president signs it, and that's the appropriations. Then the treasurer, Steve Mnuchin right now, issues a warrant, and then that way the OMB apportions to each agency. So the bill gets passed, and it says, hey, Treasury Department, you're allowed to issue this much to these departments. So the warrant gets signed by the treasurer, and the OMB administers that, and that's called the apportionment. So they say, you know, IRS, you get this much, and Pentagon, you get this much, right? So they're apportioning it all. Then comes down to the agency. So the allotments get made out. So within each agency division, there's going to be little sub-departments. So you can imagine the treasurer signs the warrant, gives it to the OMB, and says, give the Pentagon $50 trillion. And OMB gives that money tells the Pentagon, here's how much you have. Pentagon allots it. Navy, you get 10 billion. Army, you get 10 billion. So on, you know, between their, so they allot it, right? And then what happens down here, they start using the funds. So you'll recall from state and local governments that we would encumber those funds, right? So like we order a computer and we encumber the funds. So you can imagine the Air Force orders a jet, and they have an obligation of undelivered orders. All right, so they've created an obligation. All right, the jet hasn't been delivered, right? But you can imagine they want to save that money aside, just like an encumberment. It's called an obligation of undelivered orders. And so that's set aside by the program office. And then finally, the jet gets delivered by Boeing, and they pay for it, or they owe it at least, so then it becomes an expended appropriation. So it works a lot like the state and local, they just have different names for it. All right, so here's how the budgetary accounting goes, right? So appropriations first, then what's appropriated becomes an apportionment, apportionment becomes an allotment, allotment becomes an obligation, and an obligation eventually becomes an expenditure. And here's how it works within the budgetary accounts, and here's how it works within the proprietary accounts. So, under the federal budgetary accounting, the resources represent debits. Credits reflect the status of the resources within the spending process. So it comes in, and it's credited when you spend it. All right. And proprietary accounts measure assets, liabilities, revenues, and expenses, including depreciation. It's just accrual basis accounting. So they're just keeping their accountants much like the state and local government. It's accrual basis, and they're tracking it in a fairly standard manner. You wouldn't be unfamiliar with a set of governmental books under an agency that are proprietary accounts. In the proprietary accounts, instead of having retained earnings and owner's equity, common stocks and things, well, you have unexpended appropriations, right, which are still sitting out there that would transfer in. And you're keeping a fund balance at the Treasury. You don't really have a cash balance. I mean, every agency, I'm sure, has some petty cash or something, but their fund balance for the appropriations doesn't go to them. It's on balance with the Treasury, and they draw it at the time that they're going to pay for what they've expended. So unexpended appropriations and a fund balance at the Treasury. There is a cash account, but it's not really like you would think of cash. It's just staying at the Treasury Department, keeping control over that cash. So now we've made it all the way up to the federal government, and you made it to the end of the class. Congratulations. Go do that homework and take that last quiz. Then it's just the final. Good luck. Make sure you get in touch if you need anything.